Good evening, all. Ira Epstein, and here we are with your metal market wrap-up, and this wrap-up is for the evening as we're here now on Wednesday, September 10th, 2025. Now, I'm very early. It's around 4:40 p.m. The markets are closed. They'll reopen at 5 o'clock, but I had the time, and I said, I'm going to use it and put this out early today. Often I'm just so buried, I can't do these until after 6 or 7 at night, so it's easier for me today. Let's, before we get to all the chart action, talk about the day's event. You're going to get tomorrow the weekly jobless claims. They're looking for 235,000. The August CPI comes out. They're forecasting it up 0.3 month to month, and that compares to the prior up 0.2%. So they're looking for it to be a little bit hotter. There was a big, not hotter estimate than PPI, and it came out lower than the estimate. So we'll see if this matches that. The core CPI on a monthly terms expected up 0.3 compared to the prior month's 0.3. And on an annualized basis, they're forecasting it up 2.9% from the year ago, while they're forecasting the core year over year at 3.1%. Neither are near the Fed's goal, but inflation is running tame on a comparative basis. And it's the jobs that are terrible, especially all these revisions we keep getting. And do remember, in February, you get another set of revisions. The question is, why can't the president get somebody appointed in there to straighten this mess out and give us a new method so it's better than the old one that we had? You would think with all the artificial intelligence, with all the smartness we have today, there's a better way to do this. The natural gas storage report comes out at 9:30. They're looking for 70 billion cubic feet. And we're looking at the Treasury going to update the federal budget deficit. I hate that word deficit. And they're looking at it to go down a little bit to 285.5 from the 2.91 billion they had before. All right. So, as I said, in looking at the markets, it was a mixed day in stocks. The gold market dropped pretty hard intraday, and I was warning that you were going to get one of these. I just didn't know where it would come from, when, how deep. It came back, settled near unchanged. Silver also dropped and came roaring back. Copper stayed up on the day, and platinum had a nice day with a $25 gain. The dollar basically unchanged against most of the currencies. I think everybody's waiting for the CPI report tomorrow. When we talk about gold, you can see how the market has been holding, and you're back up if you were to finish here an all-time high close on a weekly basis. You're not quite there on the chart here. You can see you got the higher high, lower low where you're coming from with that. When we come to the gold in terms of the swing line, you have the higher lows, higher highs, which is bullish. In the gold market itself, as we take a look, what's up here? Well, you're overall the key moving averages, so it would be the Bollinger Band, and you keep running it. You're running that line, that black dashed line, as you go through. The pullbacks are opportunities, in my opinion, where the pros are buying, trying to sell against it until the pattern changes, and until you lose the embedded reading, you're not there. That is all bullish material. The gold-silver ratio still staying over the 18-day average, which means gold, in theory, stronger than the silver market. And the silver is marking time sideways with still an embedded reading. If the market can pop out over Tuesday's high, not today, Wednesday's, then I can target near that 4,300 level, $43 level in the silver. I'm so used to saying hundreds. In the copper, the trend is still up, but in a sideways pattern, more or less. But you can see a new trading range has developed. As I told you over time, that would happen now. And in the platinum market, nice hold yesterday at the 18-day average, a bounce today, but you haven't said that you're back into a market with higher highs, higher lows. You're not there. Any close under 1361 could actually be a bit bearish and send the market lower. Can't afford to do that. But from here, that's $36 away. That's not a small move, so that's what it would take. If it rallies, 1431 resistance area on the upside. Last but not least, the dollar still unable to get back over the 18-day average to give it upside bias. It's still staying with that downside bias, which offers overall a bullish, a bullish backing to the market, and you need the dollar to rally to hurt that. It's not happening just yet. I want to remind you, if like all these figures that you're seeing right here, if you use TradingView, we make available a suite of indicators that I put up for you. It's my slow stochastic version, different than yours. The swing lines, moving averages, window envelopes in there. And I'm going to increase it now for you for anybody that's a subscriber on the window, they'll get my daily numbers so that they can plot their window envelopes with my numbers. You can see them in my morning videos, but this way they'll come to you easier. So if you're interested, all you're doing is going to iraepstein.com. When you get there, look on the top right, Client Resources. You'll see TradingView. Go in there, fill out everything you need, and away you go. There'll be an icon up here for you to do that as well. Just give that a click. It'll take you to the same spot. It only takes up 2 of your slots, so we're not using much of what you've got on TradingView. If you're a TradingView user, you know what slots are. And it's iraepstein.com. And again, to the top right, Client Resources. Have yourself a great evening. Hope you watch the other videos, and I'll catch up with you in those or in the morning video. Take care.